Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color Podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And in order to deliver on this objective, we have structured this podcast to begin with an overview of the global markets so as to give you a big picture perspective of the global economy. This is then followed by the Kenyan segment where we review the performance of the domestic markets with a view to covering all the major asset classes. And finally, we wrap up the podcast by addressing the topical issue for that week so as to bring you up to speed with the latest financial headlines. Ladies and gentlemen, this here is episode number 64, and as mentioned previously, to commemorate the first anniversary of the Market Color Podcast, I'm in the process of writing a book that is focused on fundamental analysis, and this will help our listeners to develop a better understanding of the global financial markets and in particular how economic data influences asset prices. And in connection with that, we have some good news, and that is that the first draft is now ready and has been submitted to the editor for their review and comments. I will keep you posted on the progress. So this week, we are reviewing the performance of the global markets during the 28th week of 2023. That is from Monday the 10th to Friday the 14th of July. And without further ado, this is your host, Jamuhuri, and together, let's dive right in. We kick it off in America, where during the month of June, inflation in the United States fell to its lowest annual rate in more than 2 years. This was confirmed by the Consumer Price Index, which measures inflation for a broad basket of goods and services, and this increased by 3% on an annual basis and was the lowest level since March 2021. And on a monthly basis, the same index rose by 0.2%. Stripping out the volatile food and energy prices, the core consumer price index rose by 4.8% over the past 12 months and 0.2% on a monthly basis. This latest data confirms that inflation is indeed slowing down from its peak of around 9% that was recorded exactly 1 year ago in June 2022 and was the highest inflation rate since November 1981. However, inflation is still running well above the Fed's 2% annual target level, and traders are still pricing in a strong possibility that the Fed will enact a quarter percentage point rate hike when it meets on July 25th and 26th. And in addition to the Consumer Price Index, the Producer Price Index, which measures inflation at the producer level, was released on Thursday and confirmed that inflation was indeed slowing down in the United States as it registered a smaller than expected increase of just 0.1%. And across the Atlantic in the United Kingdom, mortgage rates have risen to a 15-year high, increasing the burden on homeowners and raising fears of another mortgage crisis similar to 2008. Mortgages in the UK have risen sharply following 13 consecutive rate hikes by the Bank of England. And most recently, the central bank increased the rates by 50 basis points to 5%, which affected homeowners as interest rates on most mortgages are directly linked to the Bank of England base rate. According to data from Moneyfacts, the average rate for a 2-year fixed-rate mortgage now stands at 6.66%, which is the highest level since August 2008 during the global financial crisis. And in the U.S. stock market, the Dow Jones Industrial Average rose on Friday as strong earnings results from some of the biggest banks and companies kicked off the earnings season. Investor sentiment was also lifted by softer than expected inflation reports, which suggested that the Fed's tightening cycle may be coming to an end, and that was good news for risk assets such as stocks. The 30-stock Dow Jones added 114 points to close at 34,509 and marked its fifth consecutive day of gains. Meanwhile, the S&P 500 dropped 0.1% to settle at 4,505, and the tech-heavy Nasdaq Composite declined by 0.18% to end the session at 14,113. On a weekly basis, the Dow Jones was up 2.3% and recorded its best performance since March, while the S&P 500 added 2.4% and the Nasdaq gained by 3.3%. In the U.S. bond market, on Friday, the yields on U.S. Treasuries recovered from a two-day slide that had been ignited by the cooler-than-expected inflation reports that were released on Wednesday and Thursday. The yield on the benchmark 10-year Treasury bond rose by 5 basis points to 3.811%, whilst the yield on the policy-sensitive 2-year Treasury note climbed over 12 basis points to 4.738%. Despite the weaker-than-expected inflation reports, the Fed has reiterated that the battle against inflation is far from over, and as a result, the market is broadly pricing in a quarter-point rate hike at its next policy meeting later this month. For your information, bond yields and prices are inversely correlated. That means that as interest rates rise, bond prices fall, and vice versa. In the commodity markets, the price of crude oil fell more than $1 a barrel on Friday as dollar strengthened and oil traders booked profits from a strong rally that saw both benchmarks recording their third straight weekly gains. Brent crude was down 1.8% to settle at $79.87 per barrel, whilst the U.S. benchmark West Texas Intermediate fell 1.9% to close at $75.42 a barrel. Oil prices gained nearly 2% on a weekly basis after supply disruptions in Libya and Nigeria heightened concerns that the markets will tighten in the coming months. Meanwhile, Murban oil, which Kenya imports, rose to $81.31 this week compared to $77.66 the previous week. And in the precious metals market, the price of gold eased off on Friday but still managed to record its biggest weekly gains since April. This was after signs of cooling inflation sparked hope that the Fed would pause its rate hiking campaign. This past week, bullion hit its highest level since the 16th of June after data showed U.S. inflation was cooling down, prompting bets that the Federal Reserve may soon end its rate hiking cycle. And as a result, the price of gold gained 1.65% for its best week since April and closed the session flat at $1,964 per ounce. And in the cryptocurrency market, cryptocurrencies were headed for a winning week after a court decision on Thursday fueled a sharp and broad rally across the crypto market. The court decision saw Bitcoin on track for a 3% weekly gain and was set to finish above $30,000 per coin. And on Friday, the price of the flagship cryptocurrency was trading lower by 1% at $31,251 US.